All right, everyone. It's Matt Harper with the Ben Kinney Denver team at Keller Williams, and joined, as always, right, as we review the monthly stats with Brenna Harper with Land Titles. So every month we want to review the numbers, the data. Real estate felt different, but was it different? What's the real information? If I'm a seller in this market, what do I need to know? If I'm a buyer in this market, what else might I need to know? Because this is all going to impact kind of the strategy and how you move forward, depending on where you're at. Is it a good time to invest in real estate? If you're watching this, I think it's a good time to invest in real estate. Currently, I'm doing it myself. I don't think we're at the top, but who knows? Don't have that crystal ball. So, Brenna, for those who are watching who are not familiar with you, and they should be if they're not, tell us a little bit about you and what is it that Land Title does?
Yes. Well, my name is Brenna Harper. I'm with Land Title Guarantee Company. We are a title insurance and closing company. So we provide your title insurance policies when you buy a home, and then we also do your closing and escrow services. So we've been around for over 50 years. We have just shy of 50 offices in the Colorado in Colorado. So we are the largest title company here, and locally owned and operated. So I love that.
Yeah, we appreciate having local ownership, right? As you know, the president of the company, and he knows you, right? I mean, it's not one of those. They're like, yeah, I know that celebrity, but I don't actually know. They don't know me, right?
Yep.
So, which segues very nice into the question that I had, and we'll get to your question later. But so, celebrity doppelganger. Who is the celebrity that you get told more often that you look alike?
So I actually don't know her real name, but Lorelai from Gilmore Girls.
Okay.
They say I look like her younger sister or daughter or something. So I get that one a lot. And then Catherine McPhee, who she was on American Idol.
Okay.
So when she was actually on American Idol, I got that a lot more. I think she's trying her hand at acting now, so she's not as prominent. But yeah, I would say the one I get the most is probably Lorelai. And sorry, I don't know her real name.
I don't know her real name either, and I have no idea who the McPhee lady is. I'm not much for American Idol or So You Think You Can Dance or all of those shows. It's not my cup of tea. I always thought you looked a lot like Charisma Carpenter. That's one that I would go for. For those that don't know Charisma Carpenter, go ahead, Google it. Tell me if you think I'm off.
I'll take it.
Yeah, so let's talk about the real estate market real quick.
Wait,
Brenna.
What about you? Who's your doppelganger?
I thought I was going to skirt without having to go through mine. I used to get John C. McGinley a lot. He played Dr. Cox in the TV show Scrubs, one of my favorite sitcoms. I also got, and don't know the actor's real name, but Randall from Clerks, in Clerks 2. I got that quite a bit. So,
and Scott Conn.
I have heard that one. I don't quite see the resemblance, but hey, I'll take it. Scott Conn's a good looking guy, so we'll take that.
Yeah.
All right. So the real estate market, Brenna, felt different here the last month. Things seem to maybe make a little bit of a pivot. Now, are we seeing this crash in the market everybody was waiting for? Is somebody finally stuck that pin in that balloon and everything's about to burst?
No. So we'll go over the data here in a second, but I don't know about you, Matt, but I really felt like August was like front half and back half. So beginning of August, people were trying to get their kiddos ready to go back to school. Excuse me. And it felt pretty slow. And again, comparatively slow, not like halt, just a little bit slower. but then the second half of the month, I felt like it really picked up again. So it's interesting because we pull that monthly data and we can't see exactly where things came in, weekly, but as far as us being in the industry and feeling it every day, that was what I felt. Talked to some other clients and colleagues, and they've had a similar take on kind of, we had a little bit of like a breath and then we're kind of back.
It seemed to be a lot of the conversations I was having with the colleagues and people that I know that, right, okay, things are slowing down. It feels a little bit different. And then boom, all of a sudden we're back into kind of some of the craze. So, we'll see the numbers as you put those together, but it is moving, right? It's still very much a seller's market. Even when we had that breath, as you called it, it's still very much moving quick. If the house is new to the market, it looks good. Odds are they got multiple offers. If it's, surviving that first weekend, we might be able to get it bought at asking price.
Yeah. I'm sharing my screen, so go ahead and.
You're good.
Okay. So this is from our First to Know that comes out on the first of the month. And I like this one because it's one metric. It's active listings. There's not a bunch of different things on the same graph. So I think it's a little bit easier to read and a little cleaner. So the red is 2021, green is 2020, and orange is 2019. So 2020 was a lot of an anomaly. But if we're going back to the last year of kind of our historic trends, we've been looking back to 2019 for a lot of that. So, the last 2 months, I've been excited to report that we have been up in active inventory. And unfortunately, we took another dive in August. So that has played a part in some of, I do think we're slowing down a little bit. I think there's less multiple offers. We'll get into some of that. You're not having to throw like the entire kitchen sink at things to get the deal done. But this pullback in active inventory makes things tighter. So it'll be interesting to see what happens in September if we kind of correct and go back towards the trend of building up a little bit of inventory in the last quarter of the year, or if we're just going to kind of choose our own adventure here again and struggle to keep that active inventory up.
Yeah, right. It almost feels like that, that carnival game where you spin the giant wheel, right? And it's just, okay, here's what lands on. Who knows what next month is going to look like? And nobody anticipated the real estate market doing what it did last year.
Yep.
And if you did, you're really better at guessing than I am.
Right.
But I would have assumed that inventory levels were going to go up here this last month and not go down.
Right. So if we look at the green line, last year we were decently below where we were in 2019. And then unfortunately, the red line is significantly below. So we're 52% year over year, but even more significant from that 2019. Now, to put things in context, the National Association of Realtors says that a balanced market would be about 20,000 homes on the market for combined detached and attached single family. So we're at 3,200. So it is an extreme seller's market, but it's interesting that even though we're in this extreme seller's market, some other little changes can really make a big difference in how we're feeling about things, like Matt talked about, with less multiple offers and even maybe getting something for list price. So yes, we have historically low inventory, but people are still incredibly aware of value. And so pricing it correctly and pricing it within the market that we're currently in, and not April or May, very like this weekend, what's happening in the market, what's happening in my neighborhood. That is all very important to keep in mind, because yes, it's still an extremely strong seller's market, but if you're coming in guns blazing like you did in April, you're probably going to miss the mark and have to do a price correction.
Yeah, buyers are always, and again, may sound like a broken record, buyers are always going to be cognizant of value based on whatever else they've seen, and it's all relative. So now buyers are not going to go back into the home that sold 3 months ago and walk through the house and say, okay, this is what a $550,000 house looks like. Let me go look at the one that's for sale, and we'll walk through that and see if it's value. That's what an appraiser does, more or less, except walking through the house that's sold. Yet they are walking through the other house that's on the market, and they're walking through this house. And whichever house has more perceived value is the house that they're going to pursue, assuming the price is the same. Now, if price is not the same, then it's a balance, right? So pricing is very fluid. It's not an exact science. Had this conversation with some colleagues earlier. Even appraisals can be wildly different on the same property at the same time.
Yep. So interestingly enough, something that we hear a lot in the market, in the news, on social media is no one is selling their homes. No one is listing their homes. Well, that's not true. We actually are very, very close to historically what you see. All of these dots are right on top of each other. So the amount of new homes that is coming on the market is right on trend. The problem is we're in a deficit of our active inventory. And so we are not keeping up. More homes are going under contract than are being put on the market. And that's because in 2020, we had less homes coming on. We have some of the new build issues with labor and lumber and different supplies. And so our reserves of our active inventory is suffering. But people are putting their homes at the market, and they're doing it at a very similar pace as they have for the past several years.
Yeah, right. It almost feels like, for those that are old enough to know and remember this, right? The Tickle Me Elmo deal, where you had to be super fast to get to the store to get the Tickle Me Elmo, or you had to make some, black market deal with somebody on the underground to get one, right? So homes are coming on. You just have to be there first. You have to be there first. You have to be there aggressively, or be a little bit strategic and take the one that everybody else has overlooked, right? Don't go for the Tickle Me Elmo. Please. Right. Don't go for the Tickle Me Elmo. That was a very annoying toy. Again, here's just my 2 cents. But, grab something else that not everybody is chasing after, and you get an opportunity to grab a good deal. There's a lot of great homes that are sitting on the market, but just happen to have missed the price. Right? There was one we talked about last month in our neighborhood. It's still sitting on the market in our neighborhood, active, because, again, they missed the price wildly when they first listed it, and they've made price reductions and still have not quite found the right deal.
Yeah, over $100,000 in price corrections, and it's less than 4 years old, less than 3 years old. So again, people are aware of that value. This is not one of those situations where it's like, let's say we're going to start high and see where we come in. The data really shows us that you have one chance to make a first impression. More times than not, in the first 7 days of listing, you're going to get your highest and best offer. So that's where it's really important to know the market. And, we talk kind of this 30,000 foot view of greater metro on the whole, but then it's important to look into your specific neighborhood, and, county, neighborhood level for that specific time, and position yourself accordingly to make sure that you are where you want to be.
Yeah, for sure. Right. Yeah. And that's where it takes some skill in internalizing the market and determining the price strategy, because there's different strategies at different price points. Do I start here? Do I start here? Do I start there?
So pending sales or demand under contract is down year over year, but we're up month over month, as you can see on this red. So unfortunately, we're falling a little bit more in line with that 2020 trend line than we have typically seen where pendings would start to taper off as summer comes to a close. So with actives dropping again, it would make sense that pendings would drop again. Typically those kind of follow suit, but we'll see. Because again, for the last 5 years, we have had a very consistent market with regards to the trend and when things peak and when they fall and what we can expect. And these last couple of years have really just kind of skewed that for us. So we can make our best predictions based on what we've seen in the past and what kind of makes sense. But then we're getting surprises as well, like the active inventory jumping or popping back down after the 2 months of it going up.
Yeah, before 2020, you could just about like set your watch to it. You had a seasonal arc to it. It was a very predictable pattern. Last year was an anomaly for sure. Yet to some degree, that trend line still follows a basic demand level, right? But you see, the demand is just so much higher than the inventory that we have available. More people are buying homes.
Yeah. So days in MLS, this one's interesting because we're down 52% year over year. We're up about 2 days month over month. So this is the first to know data. I'll show you on the other chart, but we're actually, when all is said and done, we're at about 12 days in the MLS, or about 4 to 5 days as far as a median. So from the time the home goes active in the MLS to when it goes under contract. So 2 days from July, with how quickly the market is going, is a significant shift. And that's where this like relativity comes in, because obviously the red line is significantly below 2020 and 2019, but those small shifts, you do feel that. So this is where, especially those first couple weeks in August, there was some great buyer potential for people to get out there where maybe they didn't have to go during their lunch break to look at the home. They could actually wait until they got off of work. But those in this pace of the market, these really small adjustments, we feel a lot more significantly.
Yeah. Now, if I was going to write a headline to draw people in, I'm going to say, some along the lines of days on market is up like 18%, right? Oh my God, the sky is falling. Here, let's go, right? But understand that's clickbait. It sounds like a big number, 18%. When we factor it's 2 days from 11 to 13, right? Or from 9 to 11, whatever the gap is, right? That sounds a whole lot more appealing, right? When we use the big numbers. So just understand a percentage of a small number is still a small number. So we are increased, but we're not out of the woods yet here. We're still going to be in this market for a bit.
And, to that clickbait, the last month or two, when we've had this active inventory pop up and it's like, oh my gosh, active inventory went up 22%. Well, that's 400 homes. So when we are at 3,200 homes instead of 20,000 homes, 400 homes is not going to change things that dramatically. But again, small numbers, little changes equal those bigger percentages. So some of this, why we share this, is just to kind of control the narrative of what you're hearing, on the news or whatever. So you're not scared out of a buying decision, or you don't have unrealistic expectations as a seller, because things are a little bit different. And, I've heard people getting frustrated that, I only got $15,000 over asking instead of 50. But, we're still seeing that month over month appreciation. So you're still doing just fine. But, setting those expectations and understanding the data and what you're walking into makes it a much more enjoyable and calm transaction, whether you're on the buy or the sell side.
Yeah, the interesting conversation is, right, if my neighbor that got $50,000 over 6 months ago, well, I started my price $45,000 higher than I would have, right, because his sold, and now that's a new comp. So I
Yep.
only got $15,000. I still came out ahead, right? That's still 10 grand ahead of where my neighbor sold. So keep that in mind when we're taking a look at this, that though the market's changed, you're still walking away with a lot of equity.
Yep. So talking about those small shifts that are making a difference and we're feeling it, this percent to close to list price. So this means for what the list price was and then what you closed for, the average is 103% of the list price. So at the peak, we were at 106% for detached single family and at about 105.5 for combined. So this number coming down, it's come down about a 1.5% the last 2 months. It looks like a pretty significant decline. And it is comparatively. But when we look at the data and we look at historically when we typically just kind of graze that 100% or right above it as an average during the spring selling season, and we have been above 100% this entire year, it's a good thing that this is coming down. As far as like sustainability, affordability, sanity, all of these things, it's a good thing. We do not want this to continue to skyrocket. And that's where, Matt and I are talking, we are seeing less appraisal gaps, less people waiving inspection, and just basically like signing over their firstborn to get the house. It's still a great time, truly, to be on either side. It's just not quite that like fire drill that we saw a few months ago. So still well above 2% above year over year. And, very, very strong. But yes, it is coming down, which we're happy to see.
Yeah, the 106% of list price is part of the reason we're 15.7% above where we were this time last year in average sold price. It's a rapid number, a rapid increase in that. Trust me, it's frustrating on both sides, for buyers and for sellers when we're looking at what does this look like? Trust me, sellers aren't having as much fun as people would assume, right? When they're just throwing money at everybody, it's stressing people out. So, as we balance this out a little bit and tip the scales back to that even point, things are going to be just a little bit more steady and a little bit more even killed to where, sellers aren't getting freaked out about, what's happening during inspection now, right? Buyer overpaid for the price and now they want this 7-page list of things fixed because I paid you way over. You better make this house perfect.
Yep. So this is that basically everything we just went over in a 1-page report. Our single family average is about 693, which is down a little bit month over month, which is totally normal for the seasonality of it. I'm going to jump to a different report here and we'll kind of go into a little bit different detail, but just kind of wanted to share that with you. So this is our market snapshot that we go over every month. So green is active, blue is pending or end contract, and red is sold. So this really just shows the relationship between all of these metrics. Obviously, the big difference from 2019 into 2021 is the active inventory is basically the inverse. If you look at pendings and solds, we are a little bit up, but comparatively, it's pretty similar as far as kind of that wave of seasonality. But the active inventory is the big outlier here that is causing some of these extreme market conditions.
Okay. I kind of love seeing the green line below the red and blue for as long as it's been there. Again, we need that to start growing and get above the red and the blue line.
Yep. So I think we talked about this a little bit before, but there's been a lot of talk about the forbearance moratorium coming to an end, and a flood of homes coming onto the market and stalling out the market.
Just can't wait for that flood of homes to come on the market. I'm going to get me such a good deal when all those homes come on the market. Think of the poor homeowners that people are now rooting against that are in those scenarios. But Let's talk about the real numbers. Tell me about this, Brenna.
Yeah. So first of all, we pull a report, notice of election, which is basically anyone that is behind 30, 60, or 90 days on their mortgage payment. So they're not in foreclosure yet. They're kind of in that pre-foreclosure space, but we keep track of it. So we pull it on a statewide basis. Last Friday, there were only 6 homes in the whole state that came onto that list. The week
Say that again.
6.
But let's not undervalue that number. So this flood of homes, and the more like the stay on, the evictions, the foreclosures, and all that, the forbearance is coming to an end. And how many homes?
6.
Right. Not to beat a dead horse. 6 homes in the state. Okay, I'm gonna pick up my pants a little bit, waiting for the flood to come.
Right. So, I think as things continue, we may see a few more. The week before that, we did see 10, which is more than like the 2 or 3 that we typically see. But when you think 2 of those are in Pueblo, 2 of them are in the Springs, 3 of them are in Denver, we're at 3,300 homes. We need to be at 20,000 homes or even 10,000 homes to feel a little bit more normal. A handful of homes is not going to be that flood. So the good thing too for these people that are in these positions is because the Colorado market has been so strong, in most cases, unless they have like second mortgages and a lot of other things going on, they can actually put their home on the market and come away with money in their pocket and avoid selling their home to the bank or getting their home taken from the bank. So on the positive side of that, it's great that our market supports that to help these people that are in a bad situation. As far as flooding the market, as we're seeing it right now, we're nowhere close to that. So, in theory, it sounds legitimate, but when you really take a look at the numbers, nationwide, they said based on a few different factors, if even like 80% of people in that forbearance went into foreclosure, it would only be about 2 months of the market. Or 2 months of inventory. Now that's nationwide. Obviously, if we had 2 months of inventory come on the same day to Colorado, that would stall things out because we're at 3 weeks of inventory. But that's just not going to happen. That's nationwide as 2 months. So, just kind of, again, dissecting what you're hearing, diving into the data so you don't freak yourself out of a good buying opportunity or a good selling opportunity because you have some misinformation.
Yeah, it's interesting. And I've been in the industry now 8.5 years. I've been in real estate as an agent. Now I bought a home, was an investor before that. So, been in real estate for a little bit. Now I've seen this recently. And Brenna, I don't know if you've seen it, right? But it's like 16 headshots of Tom Brady, right, throughout his career. And the caption reads like, people waiting for the housing market to collapse, right? And it just keeps going, just keeps going, just keeps going. And,
Yep.
There's 7 Super Bowl championships later for the guy, right? It's just not like, it sounds good in theory, right? All these theoretical events that are going to cause the housing market to crash. We just haven't seen it. So I'm not saying that the market won't correct itself. Markets do that. We go up, we go down, we go up, we go down. Over time, it goes up. What I'm saying is that we just are not seeing the indicators of a bubble about to burst to where we're going to see homes worth half of their value tomorrow.
Now,
the
bottom's not going to fall out.
Yeah, depending on when you're watching this, right? And any number of different events can happen that could hit this immediately to a different degree. But that's what we're seeing right now. And that's why we want to look at the data, have the real conversations about what's actually going on in the market.
So, and again, not to beat a dead horse, but just so you can see this month supply of inventory, we've talked about 6 months of inventory is a balanced market. Denver economists say closer to like 3 or 4 months. So 2019, we got kind of close to it. It was still a seller's market, but it felt a little bit better at 2.5 months of inventory. And we're under 3 weeks. So we're at about 18 days or something, 20 days. So we're very, very low. And yes, we did have a little bit of a peak up there in July. We went back down. So, taking this with a grain of salt and just kind of looking at the numbers.
Yeah.
So let's see here. So this is interesting. So this is actives and sold by price range. So I mentioned to you that we're at about $380,000 for an average price point in the Metro Denver area. And that happens to be where the most movement is happening. So 787 homes came onto the market, but 1,200 homes were sold. So what you'll see on here is, I think, okay, not in the 2 million and above, but in most of these categories, there are less homes coming on the market than there are being sold. So again, that bench of active inventory is just getting swallowed up. Now, typically in years past, we've seen it more movement in the $400,000 to $600,000 price range, but because of the appreciation that we're having, our average price point is in that $600,000 to $800,000 bracket. So it makes sense that that's where the most movement is happening.
Real estate is nothing if it's not local, price point specific. So again, what's happening overall in the 7 major Denver metro counties may not be the story in your neighborhood. There are some, luxury condo pockets of Denver that are sitting, and right now you could walk into one and probably get a good deal.
Well, and the Denver condo market is actually coming back. We had this flight to the suburbs in 2020. People wanted more space, and now people are like sick of that, and they want to be out and about and at concerts and different things. And so we're really seeing that Denver market, the Denver attached market, rebound, especially with some of the cool projects and developments going on in Denver. This one is month supply of inventory versus days on market. So again, typically what we see is once we get to like that $1 million market, jumps up to a buyer's market. But here, we're not seeing a buyer's market truly until about 3 months, maybe in that $2 to $3 million price point. We're approaching it, but the $1 million homes are going very quickly as well. We have less than a month and a half of inventory. So, we have a lot of out-of-state people coming in because they can now work remotely. They don't want to be in California or New York anymore. And to them, our homes are affordable. So we have a lot of money coming into Colorado, which is great for the economy. Not awesome for some of our local buyers that are getting beat out by some of these people with just like a different perspective. But just interesting. This is something that has definitely changed in the past year as far as speed of our luxury market.
Yeah, it's being a buyer in a different market, it's interesting to see the nuances and the changes, right? Because we've got a perspective of a market we know. We go into a market that's new to us and we're like, wow, that seems like a good deal. Let's just jump on that, right? Because it's got everything we want and a price point that makes sense. And I'm comparing it to what I saw, back home, and it's very different, right? And the ability to work remotely, right? Not to pick on people that live in Cleveland, Ohio, but if you could spend winters in Denver versus winters in Cleveland, Ohio, it's no wonder why people are moving here, right? The weather's great pretty much all year round, even when we get snow. So those that are watching that are out of state, the natives are going to hate me for saying this. The Colorado weather is fantastic pretty much year round. Even when there's snow on the ground, the sun's still shining. It's warm. It's great here. The secret's out, by the way. I'm not the one that's sharing it to everybody. Everybody already knows that's why people are moving to Colorado.
Absolutely. Okay, so this is average sold price, and we break this one down. So this is detached single family. So we've talked about this before, but it's really difficult to outsave the market. So yes, we did come down about 1.2, 1.3% month over month, but we're up 15.7% year over year, which is about $92,467,000. So outsaving the market is really difficult. And something else we talk about a lot is not only the average sold price continuing to go up, it's also the interest rates are so low. So your money is going further right now. So even if homes were to stop appreciating, which is incredibly unlikely, if interest rates go up, you're still paying more for the same house. What's more likely is interest rates are the average sold price is going to continue to go up and interest rates are going to go up. So now you're just paying more for less house. So, we've talked about utilizing real estate as an investment opportunity. I've mentioned that I bought my first home. It was a 70s condo. Townhome that ended up appreciating $100,000 in under 3 years, and I was able to use that equity to buy our next home. I'm not saving $100,000 in my piggy bank over the span of 2 years. So being able to use real estate as a tool, it's a little bit of a different mindset and a different play, but that's why we say it's a great time to buy right now, because the market is so strong, the interest rates are so low, and it's only going to get increasingly more difficult on the affordability front.
Yeah. So, depending on who you talk to, some people are going to say real estate's not an investment. Clearly, I disagree. The numbers would also stand to say that real estate's an investment. Right. So when we look at the $92,000, so let's say, right, that you had an average priced home last year. It's still an average priced home this year, went up $92,000. Well, that's great. What are you doing with it? Right. You absolutely have an opportunity to leverage that equity to pull out, say 80% of that, pull out $70,000, $75,000 and go make a go make a different investment, put it into an index fund if that's where you believe the investments are at, because it's going to see continual good return, right? Go buy more real estate, look at a second home, a vacation rental, right? You always wanted a house on the beach. Here's your opportunity to have a house on the beach that you could rent out on Vrbo or Airbnb or to the snowbirds who don't want to be in Cleveland in the wintertime, right? And leverage the equity that's in that house, right? You may be in your dream home. That may be where you want to be. You don't want to move homes, right? But that equity's sitting there. Now, obviously, you got to do a cash out refinance or a home equity line of credit. You have to do some things to capture that equity, right? And that may not be in your comfort zone. But what an amazing opportunity that the market's given us, as long as you're smart and not over leveraged, right? Because again, so we talk about real estate investing. If you're speculating on where the market's going to go, you're over leveraged, you can absolutely get yourself into hot water. However, you could, on a small level, take this out. There's your down payment on the home. As long as you can afford to keep real estate, right, you'll never lose.
Yep. I think something else to point out too is, you see that we did come down month over month, but if you look back historically, that's very, very normal. So even though we have these little waves and even some peaks and valleys here, the general trend line is going up. So the national average for appreciation is like 4%. We're at double digit appreciation at almost 16%. So even if we were to flatten out and go down to 5%, the market is, you're not all of a sudden losing all of this value in your home. It's still a good investment, even if the market slows down. So I think that's kind of hopefully what this shows you is, yes, there is some seasonality to it, but the trend line is what's important. And it's not taking you very long to be up in your investment as it stands right now. So if you're looking at it month to month, yeah, that can look scary. Oh my gosh, maybe we peaked out. But you could say that every single year on this graph, there is a peak and then it comes down, then it goes up and then it comes down. So that is totally normal. That's what we expect to happen.
Yeah, if I were to take a whiteboard and a marker and start drawing on it, right, up and down, just kind of squiggle. Brenna, tell me when we've hit the top, right? You're not going to stop until I start going back down. You're like, wait, stop there. Well, it's already gone and passed, right?
Right.
But it could absolutely recorrect and go right back up. It can absolutely change and do that, and that's what it does over time, right?
Okay, and then this is that sold to list price detached single family. We already talked about it a little bit. This is just a slightly different view. So you will see that we are coming down. We're at about that 103% closed to list or sold to list, well above the average. And then it breaks it down into the certain price points. So the $400,000 to $500,000 price range was the highest over asking at 103.4%. So again, that's where, like Matt talked about, breaking it down into your specific county, your specific price point, having this data on the high level is great. And then, if I'm buying a $3 million house, I don't really care what's happening in the $200,000 price point or vice versa. So really digging in and being hyper local with it will give you the truest numbers as to what you can expect.
Well, and different strategies, different homes, everything's a little unique when it comes down to it, right? So we're going to have conversations. Just because your neighbor sold, right, they were in a scenario they had to sell. Maybe it was a divorce situation and they had to short sale it because the house wasn't in the right condition. That doesn't necessarily mean, right, that your home just took a hit in value, right?
Yeah.
It absolutely can impact it a little bit, yet it's just one piece of data in a multiple data point plot that we're going to look at and say, okay, what are the biggest determining factors? Yeah. So overall, right, as we look at the real estate market, it felt different. It felt different for a little bit. And then we're kind of back to this inventory shortage. Still, once again, right, as we look at what's been going on with the actual data. So again, I want to thank Land Title for putting the data together, and Brenna, as you research and kind of review and internalize the information, right, so that you can turn around and share it with the rest of us, right? Because a lot of it's just graphs and numbers on a sheet, but unless you're actually diving into it and looking at the specifics, it doesn't really make sense. So I appreciate Brenna making sense of all the information for us.
Happy to do it. And hopefully we broke it down into some bite-sized pieces that make sense and isn't overwhelming to look at.
Yeah, and as always, right, you have specific questions about what is it like to buy in the price point you want, in the neighborhood you want, give me a call. Let's talk about it, right? If you're looking to sell your house, right, what is happening specifically in your neighborhood, on your street, that lot, that block? What does that look like specifically in your area so that we can come up with a plan? Does it make sense or doesn't it? So now, as we started this, Brenna, I told you we would get to your question since we went through the celebrity doppelganger. So your favorite fall activity. So what is your favorite fall activity or event?
Well, I love Halloween. I love dressing up, and I've loved being able to dress our son up. And, Matt and I were talking about it the other day. I think this may be one of the last, he's only 2, but he's going to start having opinions. And this might be one of the last years I get to pick what his costume is. So just kind of doing that and seeing him experience it kind of through his eyes is really fun.
Yeah, so Halloween was, other than I loved candy as a little kid, Halloween wasn't my favorite, because I wasn't good at the whole dress up thing, but Brenna has certainly got me dressed up in costume more because she likes the themes and getting people dressed up. And we've had some cute pictures of our son for sure, as Gru was probably my favorite there from the Minions. But
yeah.
Now my favorite fall activity is got to be football. I've been a football fan almost as far back as I can remember. Excited to have football back and being able to watch that. Really cool watching my kid get into football as well. He's chanting defense. He's doing it at the right time, thankfully, and yelling touchdown. So it's cool to get to watch and experience that stuff, with the little guy. So. Again, as you've tuned into the videos, look out for next month. We're going to do this again. You can always find these archived on our YouTube channel for previous months. And there's some other relevant conversations, some other interviews that we've had there. So specific information you want Brenna and I to discuss, or you have somebody that you know that you think would be a great guest to interview and talk through on this, drop me a line, let me know. Would love to connect with them. And again, Brenna, thank you. Thank you to everybody at Land Title for putting the data together.
Well, happy to be here, and we will see you next month.
All right, y'all. Take care.